Got it, got it, got it. Okay, so let's start again. Good morning and assalamu alaikum, everyone. Welcome to the webinar on house buying. This is our second webinar brought to you by Nustian Canada. Nustian Canada is a not-for-profit organization. We are responsible for arranging webinars, get-togethers, and other networking events for the larger Nust community residing inside Canada. For this webinar today, we have two speakers. The first one is Mr. Haroon, who is a realtor, and the second one is Mr. Usama. He is a Nustian, but now in Canada, he works as a full-time realtor. So I think I'll hand over the presentation to Mr. Usama and Mr. Haroon. Would you guys like to start?
Assalamu alaikum, everybody. My name is Muhammad Haroon. I'm in real estate from last 80 years. Okay, I have worked for almost 6 years with Remax, and from last couple of years, I left Remax and I joined a smaller brokerage because my business structure is not like that. That I should be staying in a bigger one. So anyway, so house buying starts with first of all, your savings, what you have, okay. Once you are a new immigrant, okay, everybody wants to buy a house once you are in Canada. And how it starts is that um, there are different models, okay. If you have money, like you can go for 20% down as well, okay. You can go for less down payments as well, but in that one, the CMHC insurance involves in, okay, that takes a big chunk of your, yeah, I can say that savings as well, that goes there. For new immigrants, I always recommend it's good to have, if you don't have a good down payment, always start with the new constructions. So because what happened when you are going into a new construction, so you give a deposit of like 40, $50,000 to the builder, and then you have the possession of your house or a condo. In case of house, the possession is usually in, I can say that 18 to 24 months, like in 2 years time, while in condo, the possession can be in 3 to 4 years. And then you have later on more time to save more money to have a good, handsome down payment towards your property. So that the reason for the good down payment is that your monthly payment should be lower, okay? Because you don't want to buy a house which is a burden for you in 4 to 6 months, and then you realize that you cannot afford it, and then you end up going towards selling it. And buying a house is a big, I can say that big decision. So that's what it is. So that's how it starts. And there are different, I can say that models that are, or I can say that this stuff that some of the fundings that are given by government as well. But in those ones, it's very hard, I can say that nowadays, to qualify for that, because mostly those properties, the prices should be like between 5 to 6, and I can say that in 5 to 600,000. And in GTA or surrounding areas, there is nothing that comes into that price. Okay, and even you all seems to be like, I can say that very well established people. So for you, one aspect is, I can say that on a positive side, is that you all must be able to qualify legally, that you have your declared income, okay, on the basis of that you will qualify for the property whatever you want to buy. So that's how it goes. And there are, I can say that there is a big chunk of people who don't qualify legally as well. And for all those people, there has to be some other stuff that has to be done by the mortgage guys, and that's how it goes. So first of all, the first property should be one that you are buying uh, for your living. Then it comes towards the investing. Okay, so investing uh, is all anyway for investments. I always recommend people to start with the smaller. means if you can start with the townhomes, okay, you make investment into townhomes, and I always recommend to go to the new construction, because in that way you have time to make more savings, and then you can have the down payments as well for even your investments as well, because not everybody has big chunk of money right away in their pocket sitting there to invest. So that's the reason as well for the new construction as well. And also, while you are booking into the new construction, the time that you are waiting, during that time there is an appreciation as well towards your investments as well. Also, booking into new construction, um, I looked into that as well, the any project, the surrounding of the area as well, and also the builder's credibility as well. And also, um, I can say that if you go back 10, 15 years ago, all the builders used to take the deposits like in maximum 3 to 4 checks. So 3 to 4 checks, and that I don't recommend. But anyway, nowadays there are a lot of builders who are offering like flexible plans, like you make like $1,000 monthly payments and all that. But still, there are regular builders who are still taking the deposits into still 4 checks. And for me, I always prefer the builders who take the deposit in a bigger chunks, okay? Because for me, if the builder's project doesn't have any potential, that's why they are giving you the incentives to have the flexible plans. So they are taking money from you, but at the end of the day, you are not going to make a handsome profit out of it. So that it comes. And probably I can say that tax implications. So tax, and second thing, the second property comes with the capital gains, okay? Second, third, or fourth, whatever properties you have. So when you have multiple, so in that case, the first of all, straight away, the capital gains is on the, there is it's going to coming on to the 50%. So 50% of the profit, let's say you made 100,000, 50%, 50,000 is exempted from the tax, and the rest 50,000 will be added to your income of the year that you sold the property. And in case of husband wife, so you can even split that profit into two as well, so that it will bump into two people's income, and then the tax implications are not going to be that much. So probably I can say that I have covered all these 4 things. Investors. Okay, the fourth one is investor as a developer. Um, that one is you can have a group of people, okay, and there are a lot of I can say that people are doing individually as well, that they buy empty lot, or they buy a rundown house plot, okay, then they apply for the permits to the city to make a proper house there. So that's where you guys, if you think that you guys can trust each other and make a good handsome group of people, and then make your savings into one, and then from there you can go. So these are the things that you can start. But being just jumping as a big developer, even here as well, so you have to get your certifications done, okay, become before even becoming a builder as well. So you need to do the exams, and then you need to work with somebody for a certain time, and then you become a builder as well. And then probably in that case, one of you probably has to, I can say that, spare some time and then get those certifications done. So probably we can go to the next one. Or if you have any questions, probably the people can ask as well. Okay, so now coming to the interest rates. Okay, so variable and fixed. Uh, Variables, I can say that yes, they are.
Sorry, Haroon, can I
In
interrupt
case
here?
of, sorry.
Sorry, can I interrupt here?
Yes.
These are actually questions that were on our group for a very long time. People are actually very interested in these. So these are laid out in the form of questions instead
Okay.
of. points.
Yes.
Yeah.
Yes. So okay, so the variable, the difference, okay, the variable in the variable interest, I can say that in case of if you break, let's say if you have a 5-year variable rate, okay, you buy the house today, in 6 year or 2 years down the road, you think that you wanna sell the house and move into a bigger house, okay. So in that case, when you break the term, okay, in variable, the penalty is 3 months interest, okay, while maybe you are paying a little bit more on your monthly, but there is flexibility of breaking that, okay. And also that one is connected with the prime rate as well. So if the prime rate goes up, your monthly mortgage can go up as well, or if the prime rate goes down, your monthly mortgage can go down as well. While in the fixed rate, once you have the fixed amount at the start of the term, for the whole term, your monthly mortgage will stay the same. While the one negative point in the fixed rate is that if you break the term after like 2 years or 3 years, you might be charged the interest rate for the remainder of your term. But in some banks, they do the same, like 3 months penalty as well. But some banks, let's say if you are not qualified from an A lender, like the 6 banks, TD, Scotia, and the other 4 that are there. So if you don't qualify to get a mortgage from these ones, the other B lenders, they do charge you the interest for the remainder of the term. So that can be a bigger challenge in that case. So these are, I can say that. And then what are the difference of finance real um, Okay, so the different options, that's all there. So the A lenders, B lender, then there are C lenders as well. So, but once you go to the B and the C lenders, the interest rates could be quite high. The B lenders, they do, I can say that even the A lenders, the banks, they also have their own B lenders as well. Like RBC, they have their um, home trust, that's their B lender. So what happened, you go to the B lender for a year. Let's say if you are new, you don't have a strong credit history, but you have the money to buy the house. So then you go to the B lender, you get your mortgage done, okay, and then you stay there with them for a year. Usually they offer a 1 year rate. Okay, it could be quite higher, like around 4.99, 5.99 as well, depending. That also depends on your down payment as well. If you make a good down payment, they offer you a better rate as well. And then you stay with them for a year, and after that you switch to the A lender, and then you get the whatever the current rate is going on, you get that. Um, and what can be the issues with the buying a foreclosure? Okay, so in this case, okay, I can say that in Canadian market or here in GTA market, okay, foreclosures are not very big in the numbers, okay, because I can say that there are also people who do foreclosures, but the ratio is very low, okay. But in case of foreclosures as well, people who do that, um, they damage the property a lot before they leave, okay, and they do take all the stuff out as well. Let's say they take all the and there could be some hidden damages as well, okay, that you might came to know when you start doing the renovations after you buy the property. So that's it could be a good, okay, it could be bad, okay, depend on your luck as well. So what is this? So anyway, I think so I have explained the penalties as well. So the last point, what is better, paying out mortgage faster? According to my thinking, okay, it's good to have your own house paid off sooner, because living in these countries, Western countries, okay, nobody comes to take care of you or your family if something happens to the main earning hand. Okay, in living in Pakistan, I can see that there are relatives. Okay, maybe somebody comes in, they give you the bread for a year. Okay, they might give you some money. Okay, but living in these countries, it's better to have your primary residence paid off sooner. So then also a lot of agents, or I can say that you see that as well. You must be hearing that as well. That okay, you know what? After 2 years, I have rented for 2 years. Now the price has gone up to 100,000. So I want to take out the money from the equity, okay, and then invest it. Okay, I don't recommend that. Okay, because first of all, I say that okay, you are sitting in a well. Okay, you want to dig out the well more. Okay, so does it make any sense? For me it's not, but for certain people they do. Okay, so I don't recommend to take equity out and then invest it. Okay, yes, first you make your savings. Okay, yes, then if you are short on some money, then you can take out a little bit from the equity, but taking out the whole equity and then invest it is not a wise decision, because for your existing mortgage, it will be increasing your monthly payment as well. It will be increasing your monthly burden. So it's vice versa. Okay, but it's not my recommendation. So Usama, you want to add something to it up till now?
Sure, sure. Thank you, Haroon bhai. How are you?
Okay, assalamu alaikum.
वालेकुम सलाम. एक दो चीज़ें I would like to add here in this slide. Haroon bhai has basically covered all. Uh, देखें, जब हम बात करते हैं इन्वेस्टमेंट प्रॉपर्टी की या
Sorry, Usama, can you continue in English, please?
yeah, sure. So when we
Thank you so much. Thank you.
okay, no problem. So can you bring the slides back? Yes. So yeah, sorry, I cannot. Yeah, hi. So when you look at it and at the property increase graph, it's just something I would like to add here, because the people want to ask about owner and financing and investment. See, when the property prices actually progress, can I show you something? I just made it by hand. I don't know. Can you guys see the graph somehow? Yeah, yeah, that's better. I can see
Yeah.
it. So okay. So if you, how can I adjust it? Okay, I just made it because this has just come into my mind, so I just wanted to show it. So yeah, there it is. So if you look at this graph, this is the progression of property. That's how it works all around the world. Property goes up at a certain point, it comes down, it goes up again, it goes down a little bit, it goes up again. The property goes like this, up and down, right? But ultimately the upward trend persists and it goes on for, if you take like 10 years, 20 years, the property prices will go up, does not matter what. But if you look, what the thing which stays constant is rent. You look at this, rents always go up, they never come down unless there is some situation like pandemic. For example, in Toronto the condo market is going down, but the rents, anyone here, you guys are here for like, maybe Haroon bhai, if he can tell you that when he was here for the first time, maybe the rent for the same property was $500, but it won't be 500 now, and it has never come to 450. It would have always been gone up. It could be 500, 600. It can, rents do not go down, does not matter what happens. And remember this point, whenever the property values goes down, rents goes up, because people starts to sell in order to get rid of the mortgage, and then they starts to move into rental properties. So what should be the best investment opportunity is, it should be like this. If I can show you, you buy a property which can be rented easily whenever you want. All right, see, you buy a house here, you rent, property goes up, the value of the property. When the value of the property goes down and you cannot, let's say, and you lose your job or whatever, for you the property, you can rent it. This part will be able to take care of your mortgage. Rent, so always choose the property which can easily be rentable for the longer period of investments. Does not matter whether it's in downtown Cambridge, London, wherever you live in Canada, always choose the properties which you can easily rent. Okay, so that you can rent it out and try to pay your mortgage from their rent. Okay, thank you. That's it. That's it. Harun, you can continue. Thank you.
Yes. Okay. Yeah. As Osama said. Okay. Uh, Always buy for the rental purpose. Okay. Investments. Okay. Always invest into smaller properties. Okay. Like um, I can say that the next generation keep on coming up. Okay. And the young people, the okay, that are always there in demand. Okay, so kids are keep on getting born. Okay, they raised. Okay, and then they get married. Okay, so the smaller units, 1 bedroom, 2 bedroom apartments. Okay, condos. Okay, and even the low rise buildings as well. Okay, those are the best one for rental as well. Okay, even if you want to go to townhomes as well. Okay, smaller townhomes, 3 bedroom townhomes that are 16, 1700 square feet. Okay, those are the best one for investments. So I can say that. Okay, don't jump into bigger investments. Okay, like $1 million. Okay, the bigger houses, those are not for investments. I can say that, unless until um, you are in a rollover process, that you close the property, you keep it for a year or two, and then you sell it. Okay, if you want to hold anything, any investment for longer purpose, okay, the smaller units are always good, as Osama mentioned as well. Okay, so moving on to the next slide. Okay, which option is better, owning your primary residence ASAP and living in a mortgage free? As I mentioned before, okay, yes, that's what I always recommend. Okay, because in this country, okay, if something gonna happen to me, at least my kids or my spouse can say that, at least, you know what, Haroon did one good thing, that our house is paid off. Okay, he doesn't leave us with the mortgage. Okay, so that should be, I can say that, my goal. Okay, I don't know about you guys. Okay, but I recommend that paying off your primary residence, that should be your primary goal. Okay, even before getting into investments also as well. Okay, investing in a property while taking into account the opportunity cost of money. No one is to save money for next real estate property plus. Okay, um, okay, so I'm putting money into TFSAs and RRSP as well. Okay, whenever you take out money from these accounts, okay, they put a restriction as well, that for within certain time limit, you have to put money back into those accounts as well. So you know what? Even I have my own thinking on this one as well. Okay, living in Canada for 20 years. Okay, I haven't invested even a single penny into RRSP or TFSA. Okay, first of all, the reason I don't save much there. Okay, so that I can put it on a side like that. Okay, then the second thing is that, okay, cut down my day-to-day luxury for the saving of my after my retirement. um, it doesn't make any sense to me. Okay, because I don't know that after 70 years I'm going to be living for how long. Okay, anyway, I will be getting some pension, so I don't need to boost any money there as well at the end of the my good life, I can say that. Okay, so I need to enjoy it today. Okay, I don't need to save when I will be 70 for that time. I'm not in a thinking mode of that. Okay, so but yes, you take money. Okay, for like when you guys are in, first time home buyers in that one. Okay, while you're working, okay, you have put money into your RSPs or TSFA accounts. Okay, and then now you are in a position to buy the house. Yes, so you can take out that money. Okay, but then government put restrictions that you have to pay that one back as well. So there, I think there is 10-15 years limit that you can take it out, and then you have to pay that back as well into that account. So yes, those options are there. Okay, you can do that. Okay, but still there are pros and cons for everything that probably I mentioned it. So that's how it works. So uh, in this regard, how many properties can be invested, any risk? um, I can say that there is a risk involved in any kind of investments. Okay, but the safest investment is property because it's a land. Okay, it's not going anywhere. Okay, if you buy stocks, okay, tomorrow bank company collapsed, closed, okay, your stock is worth $1,000 today. In 1 minute it can be zero. Or while your house, okay, let's say if it's worth for $1 million today, okay, and tomorrow due to certain reasons, okay, if the market goes down, okay, maybe it's gone to 900, okay, but in a couple of years back, in a couple of years time, it will bounce back. Okay, it will go back to the original price and it will cross the price as well. So yes, investing in a property is always a safe investment. And for myself, I can say that all my 7-8 years of real estate, I have done the investments and only investments. I do new construction investments. Okay, I book the house, pay some money now, then close it after a year or two. Okay, and after that I will hold the property for a couple of years and then I sell it. Okay, so I'm already in a circle of that thing that I sold 2 properties this year. Okay, and I'm closing 2. Okay, and I have already given the deposits for the properties for the next year as well, so that I will be closing next year and I will be selling that I closed a year before. So that's a quick way of, I consider, revolving some money as well. Okay, with that you make money as well. Okay, because as I mentioned in the beginning as well, that once you book a property, by the time you get it, it's already appreciated as well. So probably we can move on to the next, or Usama, if you want to add something to it, into the new construction.
Uh, no, not new construction, but there is one point mentioned here,
Yes.
that how many properties can be invested in. This is a very good point. People have been asking this for a lot longer time in the group as well. So there is no limit to that actually, but there are certain ways to do it. It's not just like that you have money and you just invest in multiple properties, because in that case CRA is gonna come at your back, because you'll be making hefty money out of it. So there is a way of doing everything. For example, you have one primary residence. Okay, on primary residence you have the capital gain, the or you can have 2 primary residences as well. I was trying to clear this concept in the group, but I was unable to, because in text I cannot do it. See, a house is called a house or a home for a person, a primary residence, if it is not rented for more than 180 days. Okay, if you can rent a house and keep the other 100 half year of the house with yourself, you can keep it, this house can be called as your home. Let's say myself, I have a home in Toronto where I live. That's my primary residence. Then I get another, my summer vacation home. If I'm not renting it for any reason, then that is also my home. That will also be qualified for the capital gain. See, capital gain and income, these are 2 different things. Capital gains can only be on your homes. Okay, on your homes. If you have made some investment and you are selling it and you are doing it multiple times in a year, that is not your capital gain. That is the business income, or your that can be your personal income. If the houses are in your name, these are the personal income. If the house is in your business name, then that is the business income. So whenever you have multiple properties, always try to own it under a company's umbrella, because company's tax is 16%, as all of you know, and there are a lot of things you can do to get rid of the tax bracket while showing your expenses in HST. For example, your commission, the commission for the real estate can go there. um, Mortgage, all the mortgage, whatever you have fees that you have paid, even if you have paid the mortgage broker 1% or 2%, you can claim it. Okay, uh, lawyers fees can go there. And there is one more thing for the investment property. If you do it under the company name, you can put a lot of expenditures in renovations and stuff, although you haven't done it like really, but you can do it. Okay, and in that case you will be able to save some money. But if it's in the under your personal name, then whatever bracket you falls in, let's say 30%, 32%, whatever the bracket you are in, you have to pay that amount of money. Okay, and that's it for this one, and let's move on to next one then see.
Okay, investing into the commercial. Okay, so I can say that I don't have any experience on that, okay, but I can say that it's the same kind of it. I can say that it works the same way, okay. And the only thing is the I think so the mortgage qualification. I think for the commercial, if I'm not wrong, Usama, I think you need 35% down for the
Uh,
mortgage.
no, yes, Harun bhai, for the commercial properties, for the commercial properties, Harun bhai is talking specifically not about the residences. He's talking about the commercial properties, as in gas station, as in a piece of unit you want to have in a mall or in a strip plaza. He's talking about that. There you have to put 35% down payment usually, unless you have some out of the blue investment and some big credit history, long history with the bank, then and you have had done business with the bank for a long time, then you may qualify for 20% or 25% as well. But those are rare, very rare cases, and I'm certain that amongst all of us in the Nest group, no one would qualify there. For the commercial property only, this is not about residential one, because residential is different. Commercial is entirely different ball game.
Yes,
Yeah, sorry, Anbhai, you continue.
it's okay. It's okay. Okay, then it comes the investment, buy to rent versus buy to sell. Yes, if you wanna, I can say that if you wanna rent it the property for longer time, okay, um, then after every 3 4 years you need to invest some money on the property again. I can say that, okay, because tenants, they have done some wear and tear and all that, okay, and then you need to fix those things as well. Before that, you have a big surprise. Yes, you can do both, okay, buy to rent, okay. um, Mainly I do buy to sell, okay. I book with the builder, okay, I get the possession, okay, keep it for a year maximum. I keep it for a year, okay, and then I
And
sell
then
it.
I sell it.
So I am into the buy to sell mode, okay. And there are a couple of my colleagues who suggested me to switch to the other modes. I said, you know what, I am already working in this mode, so I'm comfortable here. And I can say that probably it's the same thing for the people as well, so they want to work in their comfortable zone. So that's what it is. Both can be worked out, okay. If you want to do the longer term rental, I can say that in that case, the condos are good because there is less wear and tear, okay? Because mostly all the wear tear is going to be inside the unit. There is no wear tear happening that you have to take care on the outside. That is comes under the corporation, so they do take care of the outside stuff. So, Osama, you want to add anything to this one?
Yes, sir. It is just on people's approach. As Harun Bhai said, he wants to do it buy to sell. Okay, so let me give you an example. If and Harun Bhai would definitely agree. If I someone helps you buy a house that is, let's say, around 750K, and after paying 20% of down payment, your mortgage comes around 23 2400 dollars, and including taxes and your insurance, you are paying at the end of the month, if you calculate, around $2700. And the unit is such that it can be rented at around 38 35 $3700. Means you are making $1000 or $1200 monthly on a property where you have just put 20%, and you are getting a passive income for the longer period of time. In that case, you have three incomes. One is rent, which is $1000 or $1200 coming to your pocket, that is surplus. Then your equity is building by the means of principal amount going in your mortgage amount. Then third is the property value increasing. So that is a really rare and but a very good preposition. For that, if you get some house like that in which your carrying cost is being taken care of, buy to rent is fabulous, and you are getting like a $500 to $300 on top for the maintenance purpose and everything. Then but for the pre-construction specifically, because Harun bhai is really specialist in the pre-construction. Pre-construction is a thing buy to sell. Okay, you book a house, you wait for a couple of years, you give it enough time to get the prices go up, and whenever the equity is built in the house in your prices, because uh, you sell it. That's the best case. But if you or investor who has a thinking that I need some passive income with the period of time, then you should go for buy to rent. People like myself, I'm a lazy guy, so I would like to go for a passive income, on side, so that I don't need to worry about my account is getting like 1,200, $2,000 every month from a certain property. Of course, that can only be done if I have surplus money to hold such a property. Thank you.
Okay, so now moving on to the next one. Okay, so um, okay, so that's the tax thing. Okay, so how to save the taxes? Okay, so I can say that if you have made a profit of $350,000, as mentioned in this example, so I can say that out of that, if you pay 90,000 tax, it shouldn't matter much, okay? Because you still end up making $240,000 profit. That's a huge profit, okay? So, and that doesn't happen, I can say that in most of the cases, okay? I can give you my own examples, okay? That after I got the possession, so I made like $40,000, $50,000 profit after keeping, like holding the property for a year, okay? And then out of that 50% is tax exempted, and then the rest 50% you can split that one as well, even on husband and wife as well, so that you pay lesser bracket. Okay, to reduce, in this case, to reduce this 90K to a lower tax amount, I can say that that could be an accountant's field. Okay, they can guide you better how to do the tax cuts. Okay, so how to save money from the taxes. Okay, so I can say that that's a audit guys accountants field. So for that one, probably the best thing is, I can say that they can guide you better. Okay, um, there are some certain things, okay, that can be done. Okay, if somebody comes into that situation, okay, you can have my number, give me a call, I can tell you one-on-one, okay, how to reduce this 90K to a lower amount. Definitely it can be doable, okay, but don't think that you can be ending up paying like $10,000-$15,000 tax once you made $350,000. So you need to pay money to the government as well. Okay, maybe you end up closing the case today, but CRA can open up your files for up to 7 years. Okay, and they can say that, okay, yeah, you sold a property in 2018. Okay, you showed that much income. Okay, can we have a proofs that how much you made out of it and all that, how much you bought it? Okay, you have write off some of the money against that, you bought some new appliances, you've done some renovations. Okay, can we see some of those receipts? So it's better to pay money to CRA, okay, instead of being opening up your files 4 years, 5 years, or up to like 6 years down the road. Okay, and then you don't have any of the receipts sitting with you. Okay, and then you end up paying the tax amount with the big penalties that process of buying the property first and the second one. Okay, yes, you can go up to four. Okay, I think so. Once you go to the fifth one, I think Usama has the answer for that. Probably how much down payments. I think there is a bigger amount of down payment that is needed as well. So, but I can say that mostly uh, most of the investors, okay, yes, there are people who have like 10, 15 properties as well. Okay, so then I think so it goes towards the more down payment. Okay, and then once you have like more than three, four as well, then all those rents come into the consideration as well for the mortgage qualification as well. So there are certain things that can be done. Okay, so it can help you. Okay, okay, and then the last point is how much would be paid if it was an investment. um, Probably Usama can have some light on this one. Usama.
Sure, yes. So the thing is, as I have mentioned earlier, see, there are two approaches. Either you have properties in your own name, or you can have a company and own multiple properties. So I'll try to draw a sketch in front of you, and you make your own decision. Let's say about the I'm talking specifically about 3 4 properties. Let's say a person has 3 or 4 properties in his name or in her name. For that, there is no restriction that you cannot have more properties than 4. You can have as much as 17 properties in your name, or 13 properties in your name, as long as you are qualified. And being qualified, I mean that you have enough salary or income, whatever the means you have, to support and tell bank that you are earning this much, and you will be able to hold these 5 6 7 13 whatever properties you have. All right. And you know how that process works. You have to show them your um, CRA statements. You have to show them your income, maybe pay stubs or whatever. Or if you have some business income, then you can show them business income. There is no restriction on 4 properties or 5 properties. So thing is, for your primary house, for your own property, bank can give you uh, loan up to 90% or 95% in case you have put 5% down, 10% down, or 15% down. But for the investment property, it has to be 20% at least. Okay. Because bank does not want to share your risk in your business investments, in your gains. Bank does not want to. So that's why they want you to put 20% at least. So let's say you have already 4 properties, you want to have a 5th property. You go to bank, you ask them that I want to have a 5th property. They'll ask you to show your credentials for that. If you are good enough, you may be able to get it with 20%. But sometimes this time of the real estate, they ask for 35%, up to 35% in for personal, and for if you are doing it under company, it's the same thing. All right. But it's always better to have multiple properties under a company's name, under a business name, so that you can get away with the tax that is just 16%. And if you are do not want to pay CRA that part as well, 16%, then there is another solution. You do not use that money, you reinvest it in business income. If you reinvest all the income, you do not have to pay tax. That everyone should know. And if you are taking some money out of it, you are taking dividends or whatever, you have to pay the tax according to your tax bracket wherever you falls in. So owning multiple, for example, RBC I think allows around 13 properties. They If you own 13 properties, you are good to go there. If you are going around 13 properties, TD starts to ask questions after 4 properties. And similarly, Scotia, they allow you a little more properties. And but it all depends upon, for example, you have a credit score of $800, Beacon score of $800. Beacon score is equivalent to Equifax. That is the most reliable. So that your Beacon score is $800, 800 points. In that case, bank would, and you have the enough income to support for the 5th or 6th property, bank would be easily be giving you that property for 20%. Thank you.
Okay, the last point here, it says that how I can avoid paying capital gains. Okay, there is only one way to avoid that: you leave Canada. Okay, so you sell everything from here and move back to Pakistan. Okay, there is no other way. Okay, to avoid the capital gains, you have to pay them something. Okay, so that the CRA can stay shut up. Okay, that they don't come back in next 6-7 years to bug you. Yeah,
Sorry,
Usama, you want to
Haroon
say
bhai,
something?
yes, about this point. Sorry, guys, this is very important. This is my own example happened to myself. I used to own a company, and we were paying the taxes regularly and everything. This has happened to me like 3 years ago. We have multiple partners. We had 4 partners and everything. Company was running okay, but with the passage of time, but that was not real estate business. I'm just trying to give you an example that Haroon bhai has mentioned. We were paying taxes and everything. All of a sudden, business went down and we were going in negatives. And of course, we were not going to pay them any tax. But you know what happened in the business income after the year? CRA gives you the tax rate, HST, the give back. So when they gives you the tax back in the form of HST, the tax return, uh, our accountant somehow advised us, you do not need to pay anything. Just you, whatever the money has come, you can use it. I have filled the books and everything, because He was specifically trying to make us save only $1,500 in taxes. You know what happened after 3 years? As Haroon said, they took out my company and they started probing into it. Inst- Earlier, if my accountant would have advised me correctly, I would have get away with paying $1,200 to $1,800 tax. That's all I was owing them. But just in order to be smart and trying to be more, I don't know, whatever he was trying to do, he asked CRA that instead of Usama, you need to give him some HST returns. All right. At that time, CRA gave me 40,000 of HST return. We used it. I don't know, because I thought my tax guy is doing it very well. He is a CPA. He's a big firm. I cannot name the firm, but that is a big firm. You know what happened after 3 years? CRA sent me a letter of tax fraudulent tax evasion, $125,000. $125,000. Earlier, I was supposed to pay $1,800, and when they open the file, then they do not just open the file; they open each and everything. Remember this, not for you, but your partners. We had 4 partners. All of them, including myself, we got a letter that all of us needs to pay the tax which we have evaded fraudulently, $125,000. Money, around $5,000 we had to pay, and for a company that was closed, being in lost, everything. And we fought that case for 1.5 years, and anyways we had to pay nothing because that was all being messed up by the accountant. So always pay your taxes, pay less, but do pay. Do not ask flag, make it red flag. Thank you.
Okay, I saw a couple of questions. One question I just saw, somebody was saying that I have a credit score of 720, it never goes up, and I don't have any debts. So that's the reason I can say that it's better to have some debts and then make regular payments. Okay, the best way to build your credit history is a car payment, car loan. Okay, so even if you can buy the car on cash as well, it's better to have it for installments for certain time, for some time. Just let it run it for like 6-7 months as well, and after that paid off. Okay, because the quickest way to establish your history is car loan. Okay, that's the quickest and the fastest way. Okay, then I saw another question. Anyway, I'm just going to pick some questions as well, so probably if I can answer those. There is a question regarding halal mortgage. Okay, so
Haroon, sorry, can I interrupt you here?
Yes.
Do you want to go on to the questions, because we have a lot of questions? We had a last slide on investment as a development, but I think it's better to answer questions. Would you suggest?
Yeah, actually, I just saw the last page. Okay, mostly we have spoken on everything. Okay, probably I think I can say that I will speak on this one first, assignment sales. Okay, and then probably I can answer some of those questions.
Sure.
Okay, the assignment sales. Okay, so mostly these are offered by the builders in condos. Okay, in residential, some of the projects, and also it's the same thing as I mentioned in the beginning. Okay, the builders who are for the houses, okay, who are offering flexible plans for the down payments. Okay, that's where the catch is, and that's where those builders are offering assignment clauses as well. So assignment clause is like selling a property, same like in Pakistan. You know what, mostly the builders are dealing in, the files. Okay, that you own a paper. Okay, you sell that paper to somebody else. Okay, so that's what it is. So I booked a condo 4 years ago. Okay, so now that condo price has gone up 300,000. Okay, so I want to sell that condo on an assignment, so I want to sell that paper to somebody. Okay, yes, still I will be coming under the tax implications on that income as well. Okay, I have to pay taxes on that as well. Okay, but one suggestion I always recommend people. Okay, that you planted a tree. Okay, when it's ready for the fruit. Okay, you sell it to somebody to take the fruit and sell it to the market. Choice is yours. Okay, I always recommend people to close the property and then sell it. Okay, because selling on an assignment, okay, first of all, let's say if I book the house for like an apartment for 400,000, okay, and I'm selling it to the guy on the current market, that's 700,000. Okay, so what happened if I have already given a deposit of 50,000, and that person, whoever is going to be buying that property, okay, he's going to be bringing all that money on cash, because not every bank offers the mortgage on the current value of the property in assignment sales, if I'm not wrong, Osama. uh, so what happened, so in
Yes.
that
Sorry, sorry,
in
continue.
yeah, in that case, the buyer, whoever is going to be buying the property on the assignment, okay, he's going to be paying me 50,000 that I deposited to the builder. He's going to pay me that, okay, and then he's going to be bringing the other 300,000 cash as well. So instead of he investing that big money, okay, he says that, okay, why I can't buy the stuff from the market? Okay, if he's going to buy a $700,000 property from the market, okay, he's going to be making only $140,000 down if he's going to go going for a 20% down as well. So instead of putting 140,000 in, on the other side he's going to be using like almost $350,000 that he's going to be paying me. So in that case, and also same thing, um, it's better to close the property, okay, and because once you're going to close the property, there will be some means that you can take off or you can write off some of those gains, okay, and you will get a better return out of it as well, because whoever is going to be buying the assignment from you, they will be trying to get a deal out of you as well, okay, and they will not be offering you, or you will not be getting the current market price of that property as well. So I don't recommend people, okay, unless until you are in a crunch that you cannot close it, okay, that's a different situation, okay. But in assignment sales, if I'm in a buying position for an assignment, okay, right now I'm looking for an assignment sale property to buy, okay, definitely I will be looking for a deal, okay, so that if the current price is around 700,000 800,000, okay, I would like to get it at a lower price, so that at least I can have some built-in profit into it, and then I will hold it for a year or so and then sell it. So that's what it is. So everybody is looking for that kind of stuff into it. Osama, you want to add something into it?
No, no, Haroon, whatever you have said, I agree, and that is how it works. And assignment clause looks good in the start by the builder when you look at it. Okay, I can sell it and whatever, but it's really really hard to get a buyer in assignment clause, because they end up paying more upfront, instead of, because they have to pay the profit you are getting from their own pocket. No bank. Harun Bhai actually mentioned that some banks do, no bank do at this time, because property is crazy. People are asking for insane profits. For example, someone bought the house at 400, the current market value, which should be around 500,000, and the buyer has to pay that 100,000 from his own pocket. No bank is going to finance it for that 500,000. Okay, that's it. Harun Bhai was right about that. Yeah.
Okay, so now can I answer that question on the halal right now, or
Ji Harun bhai, please go ahead.
okay? So somebody asked a question regarding a halal mortgage. Okay,
Yeah.
uh, you know what? I can. That is my thinking. Okay, so I can say that uh, there is. There is no halal way of getting a mortgage in Canada. Okay, because what happened? The percentage that those people charge you, okay, is much more higher than the bank rates. Okay, and the qualifying criteria is very hard for that as well, okay. First of all, let's say, because they also have same kind of restriction of a price tag as well for a property, that they can buy a property for you up to a certain price figure, okay. If you want to buy anything more than that, all that money you have to bring it from your pocket. As I know ISNA, because I have worked with the ISNA Islamic Center. Okay, I was there for like 4 years. Okay, so they used to offer. Okay, they used to have, at that time they used to have a upper tag of, I think, 600,000 limit. Okay. So even in that 600, okay, so they say that, okay, you have to have shareholder of the cooperating, okay, with the 20% you put into the, first of all, to get onto the buying list, okay, you have to put that money into the corporation. Okay. So you invest that money into the corporation, then you go on their list. Okay. And that list can be a year or 2 years long as well. Okay. Okay, there are some of the people who are offering right away, like the banks. Okay, you walk into them, okay, they give you the mortgage right away. Okay, those ones are the same kind of stuff. Okay, so what they do, they take the money from the bank, okay, and then they give it to you. Okay, and they say that, okay, we are just a middleman. Okay, so we are just a so all the blame we are taking on it. So your contract is with us. Okay, so we are giving you the money. It's not bank money, it's my money. Okay, we are borrowing it from bank. That's a different situation. So that's how it works. So I can say that you guys must be hearing the same. I can say that in the meat stuff as well, that, you know what, hand slaughter, machine slaughter. So it's the same debate. Okay, that is un it cannot be resolved. Okay, there is no end to it, to that debate. Okay, so same thing. So hand slaughter is halal, machine slaughter is halal. Okay, both are halal. Okay, so I can say that the same thing. Okay, so living in Canada. Okay, so if we really want to go up to that instant, okay, um, I can say that, okay, I want to get into a interest free mortgage for a reason that, you know what, because Islam prohibits interest. Okay, so if you really want to go to that instant, okay, then I can say that the biggest thing comes into my mind is that I shouldn't be living in Canada, because if I'm not here for a preaching of Islam, I shouldn't be living in a non-Muslim country. Okay, so then you can do the debate whichever way you want to go. Okay, so that's what the problem with us being Muslims. Okay, that we pick and choose. Okay, what I like, I like that. Okay, so I will take that. Okay, so if we really want to follow the religion, okay, it all goes straight. So that's what it is. So then and I have heard these examples from my known people as well, that the people I know, okay, that for 2 3 years I used to hear that, you know what, interest is haram. Okay, I'm not going to buy a house. And all of a sudden I saw the guy, oh yeah, you know what, I bought a $1 million house. Oh, and how you got it? Oh, I got the bank. Oh, okay, I got a fatwa from a scholar from Pakistan and all that. So it's the same thing. Okay, so you got a fatwa for your specific reason. So that's what it is. So there is no way of getting real halal. Okay, and that's what it is. So I don't know if you want to pick any other questions that you think that we
Yeah,
missed.
yeah, Haruna, we have a couple of
I don't
questions.
know if Usama want to put some light onto it, on the halal.
See, I have a different perspective. I do not preach anything because I'm just as a person I am. You can see me, right? I do not preach anything. Islam is very clear about it. It's personal choice. Do whatever you think is better for you. I cannot comment on this. I never comment on this on public forums. That is my choice. You have your own personal choice. You do it whatever you do, the best thing you think is for you, because no one is going to answer for yourself. So do it. I do not comment on that. Sorry, because that is Islam is very clear about it. So I'm not going to comment about it. Okay. So please, this is my point of view. I'm sorry, because it is a very sensitive topic, and I really do not like people to think that I'm avoiding it. But that's the reality. If I started debate, it can be heated. This is a very sensitive topic. It is.
I
Yeah.
Yeah.
Sorry. Thank you.
Thank you, Sama. I'm gonna go into questions. I have a couple over here. The first one was Talha wanted to know what brokerage firm Haroon works with.
I work with the Prime One Reality. Okay, I just switched from Remax a couple of years ago. Okay, uh, because mostly I'm dealing with my own investments, so I have very limited portal on the clientele. I can say that I have a limited number of people that who do invest with me. Okay, so they go with my trusts. They say that, okay, if Harun bhai, if you have booked a property there, okay, we will book it. If you're not signing any documents, okay, we are not signing. So book myself first. Okay, and then I recommend people. So my business model is not that way that I really need a big name to sell myself. Okay, so that's why I left Remax 2 years ago and I joined one of my colleague. He was there as well with me in the same office. So he opened his own brokerage. So it's Prime One Reality. Okay, so that's where I work.
Okay. Okay, got it. The next question is from Hassan. What factors should I look at to decide if I should get a pre-construction property or otherwise?
I can say that the biggest factor is the down payment. Okay, if you think that you have $100,000, $200,000 sitting in your pocket right now, okay, especially for your primary residence, okay, you can go and buy a property from the market. Okay, but nowadays I can say that it's not a very good market to buy the houses. Okay, because as Osama knows as well, that you list the property for 700 today and you end up selling tomorrow for 900. Okay, if you are in a buying position and if you think that you can trust your agent, okay, first of all, I can say that we both are real estate agents. Okay, so we are not accountants. Okay, we are not financial planners, so we cannot like whatever uh, things that we have mentioned on those points, okay, those are our own experiences. Okay, so you sell the property, you make 100,000 out of it. Okay, so the accountant is the one, okay, who can tell you better way to how to save money on the gains, okay, on the taxes. Okay, so we can help you in buying the house. Okay, but the inspection part can be done by the inspectors. Okay, even still it can anything can happen to anything anytime. Okay, I moved into house today, a pipe can burst tomorrow. Okay, so I cannot blame Osama that, you know what, why you didn't do the job properly. Okay, so Osama, if there are 200 meters pipe running in my house, Osama cannot go and check all that 200-meter density, that okay, how strong the pipes are in this house. Okay, even the inspector who is the professional, he cannot do that. So I can give you my own example. I bought the property in 2017. Okay, I did full renovations, I put brand new AC, brand new furnace. Okay, I enjoyed the summer of that year. Okay, 2018 started. Okay, summer started, I kick on my AC. Okay, boom, it's gone. Okay, I called the technician, he came, he said, you know what, compressor is gone. So it's 1 year brand new AC. Okay, so if I bought a house for my client, okay, he walks in today, okay, he turns on the tab and the tab is not shutting off. So I cannot do anything on that. Okay, so or I cannot blame Usama for that. Okay, so it's once you buy a property, okay, you should be able to have the thinking of that you know what, every year I can say that minimum $3,000 to $5,000, okay, or every 4 or 5 years, okay, around $10,000, okay, you need to invest into the house as well. Okay, you need to paint. Okay, you need to change some light bulbs. Okay, even same thing on the light bulbs as well. Okay, and even if you're not going to do the duct cleaning properly, okay, of changing the filters for the furnace. Okay, then having the annual cleanings done for the furnace, same thing, annual services for the AC as well. If you're not going to take care of those things, okay, then definitely it's going to burst. So those are the things that comes with it. Okay, to own a house, those are the things that comes with it. So that's what it is.
The next question that we have is from Saad. He wants to know, what are the complications of getting a mortgage as an independent incorporated contractor when you are showing a low taxable income due to expenses? So he also said that Haroon mentioned legal and other avenues that brokers can use to get a person qualified. Can you elaborate on
Uh,
that, Haroon?
yes, sorry, I have to please, Harun bhai. Uh,
It's a
Go
recorded
ahead, go ahead, go ahead, go
Harun
ahead,
bhai,
Sama, go ahead, go ahead.
Harun bhai, it's a recording. So please be careful while mentioning whatever the means the brokers use to get people approved. For that, you may call us directly. You have my numbers and my
Okay.
number and his. So Harun bhai, please do not talk about the other ways of mortgages. You know
Yeah,
what I'm saying?
I have I agree with you.
Yeah, I told you
Sama.
this first. Yeah, we
I'm
cannot
sorry, there
explain
was a
this online. Yeah,
question. Yeah, it was a
yeah,
question, so I
yeah.
had to.
I'm just telling you. Yeah, yeah. We
Yeah,
won't be
so
able to do it. Yeah.
if anybody has any questions where we don't want to have
Legal
any
way of
legal
everything. Legal way of have.
implications,
Yeah,
yeah,
sorry. Legal way of everything. We can tell you everything. But if
yeah.
you want to ask the gray areas, call us.
Exactly. I would totally agree with that. So if anybody has any questions that have legal implications, please reach out to the speakers directly instead of asking them on a forum. So if I have any further questions related to that, they will not be asked on the forum. The next question is: do you recommend buying a lot of land if the person buying is not cannot afford a house right away? This question was from Javad.
You know what, buying a land, okay, so you're going to buy the land for what purpose? Okay, so it is not like in Pakistan, okay, that you buy a plot. Okay, so there are no plots or any piece of land available to build your own house. So you can buy a land, okay, way outside somewhere. It could be an agricultural land, okay, because on a land piece of land, okay, if the land is not I can say that in a zone where a house can be built, okay, then there is no point of just buying a land.
Yeah. Okay.
Yeah.
So the next
Assam,
I
you
question.
want
wanna
to add something?
yes, I wanna answer this question
Yeah.
a
Sure.
little. I wanna elaborate on this one. This has been brought up many times in the group as well. Bank do not mortgage an empty land. If you have money, you can get it because there is no collateral for the bank. A house itself is a collateral. Land is an agricultural land or whatever the purpose of the land is. It does not have weightage for the collateral for the bank to accept it. Because bank always gives you money because he sees something or they see something, right? For a land, if it's for a 200,000, you can have a land, you can build a house, no problem. If there are no amenities, just you got to have electrical line going and you need to have a road passing by. So rest everything can be taken care of. Even if the electricity is not there, if you really want to build a house somewhere far in wherever you want to build this, so you can have solar panel or whatever, no one is going to ask you questions. But you cannot, how would you be able to mortgage it? If you have for a land, you may be, it's a $200,000 land, $200,000 land, you have to pay upfront. Or else you have enough permits pre-approved by the city, by the bylaws, by that municipality. You show them to the bank, and if they agree that these permits are okay and you have enough credits, only then bank can mortgage the empty land for 50% of the price only, not 100%. So that is a very tough and long process. Instead of that, there is another way. That is which Haroon bhai mentioned in one of his points during the, I think you have skipped it. Buy a rundown house, a house which is not livable. A not livable house means the amount you are paying is basically for the land. Buy that land with a rundown house, bank will be able to mortgage it 20%, 10%, whatever you qualify. Get the land with bank's money, start applying for the permits and everything. That in Toronto and GTA, if you are doing it from scratch, takes, because I do that, it takes 16 to 18 months in GTA. If you are in Calgary, that can be done in 2 months. They are faster than us. In GTA and around, that can take up to 18 months. Okay, because there are so many people doing it and there are so many legal intricacies. So once that's done, you bring a builder, you start building your house. Okay, so it's always, if you want to build your own house, custom house, better go for a rundown house. There you are only paying for the land instead of having an empty land, paying more and doing all that stuff. Okay, thank you.
Okay. There was another question. I guess this is a question from me as well. So, how do you ensure the quality of a pre-construction, construction while investing in a pre-constructed unit or a house? Because I remember Haroon Bhai saying that if the developer is asking for a lot of checks over a lot of number of months, then it is not that high quality. So, how? I guess my question is, how do you determine if it's a good investment overall in pre-construction
um, I can
particularly?
say that it's not of a bad quality, okay, if you
Mm-hmm.
comes to the quality, okay, the quality should be standard, okay, because that's how the because everything has to be inspected, okay, by the city people, okay. uh, the standards are the same, okay. So if you're looking for an investment, okay, so that's where it comes, okay. So the rate of return is not going to be that good, okay. if the builder is anyway, that is just my thinking, okay, because that's how I looked into the strength of the project's credibility, I can say that project return as well, okay. So that's what it is. So other than that, I can say that mostly all things are built on standard, okay, even from the scratch, okay. Once they do the basement work done, like the concrete work done, the inspector comes and they inspect the concrete work, then they start the next step. Every step is inspected by the city people, and they have a certain criteria. If the thing doesn't meet that criteria, they have to fix those things. So I can say that the quality wise, most of the stuff, yes, there are certain builders, okay, who give some of the I can say that the a little bit upper rated quality stuff, okay. Some of the builders, they give it built into the price, okay. They charge the price up front a little bit more, okay. Maybe people have seen those things, okay, that in one city, okay, a builder is offering same size of house for 400,000, and the other builder is offering the same size of house for $450,000. So then I can say that it always better to check the basic stuff that builder is giving, okay. So I can say that my own experience from 2013 till now, my first investment into the new construction was with Matami, okay. I started with Matami, and from 2013 till 2017, that was my last investment in Matami. Then after that, I left Matami. Their quality has gone down, and they just like makes the basic box. That's what it is. So the everything, okay. Even I can say that in upgrades, okay, some of the builders, they all, like I can say that in kitchen, okay, standard is ceramic tiles, okay. That's what it used to be, okay. Now what happened, the cheaper way is to put laminate, okay. So builders now what they're doing, okay, they give you the kitchen as well with the laminate, okay. If you need to change it to the ceramic, you need to pay more, okay. So that's a way of making money, okay. The builders are giving, I can say that the I can the oak stairs, okay. So the natural oak color, okay, they said, okay, we are giving you that, okay. So natural oak color, nobody is using that nowadays, okay. So to change the color, to stain it, they charge you more. So that's how the builders catch, okay. The certain builders, okay, they give you those things in the price, okay. But once you go, we are talking on these things, okay, I can add a couple of things that once you are booking a house, okay, at least two upgrades that you should always take, okay. If the builder has the carpet on the stairs, okay, make sure you take that to the wooden ones, okay. Because these are the upgrades that are hard to do later, okay. And also if you can upgrade the tiles as well, okay. If you, because the standard is they give you 12 by 12 size, okay. And those are, I can say that outdated, those are like 20 years old stuff, okay. They still give you that, okay. If you can, because these are the biggest dusty stuff if you're doing renovations in your house, okay. If you want to take out the tiles, okay, that's where you're going to get most of the sand coming, okay. If you want to upgrade your stairs to the wood ones, okay, that's where your lot of dust gonna come. So, and also these are not gonna be up to the same level of quality or the standard as compared to the original ones that are done by the builder if you do it later on. Because on the corners, okay, you will see that the tiles are not fully laid under the side trims and all that, okay. So these are the two I can say that I always recommend people, okay. Because the rest, everything, I can say that is cheaper. Even these things are cheaper to do outside as well, but it's better to do it through the builder. You pay a little bit more, but it's done, I can say that, properly. So that's what it is.
Okay. There's
Sama,
another
you want to
question.
add something?
Oh, sorry. Yeah. Go ahead, Osama.
Okay. He said that
No,
it's
no,
all good.
yeah, 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 good, good.
Okay, so there's another question from Ma'am Sumaya. I already asked one for her. There's another one. She says, if someone has an excellent credit score, 820 or above, history but no credit score 820 or above, but no debts except revolving credit. Would that involve individuals still be eligible for mortgage approval or for a higher value, especially a 650 plus K property?
You know what, the value, the score is excellent. Okay, yes, that's a plus point. Okay, then for the to buy a property of a bigger price, okay, that always comes with the down payment and your salary. Okay, yes, credit score is a factor into that as well. Okay, but for you to qualify for that, okay, it comes with the down payment and your salary that's going to support that. Okay, yes, build maybe if let's say TDS GDS ratios that the bankers look. Okay, let's say if the qualifying is the score is 38, if you are at 39, okay, they can take you that. Okay, they will consider you for that. Okay, because of your good credit. Okay, but with the basic concept for you, even if you have a zero credit as well, okay, if you put the 35% down, you can buy the house tomorrow. So there are banks who offer that as
Okay.
that is not a criteria of for you to buy a house. So yes, that is a factor, but that's not the
Not
concrete
the
end of the
biggest.
word. Yes, yes.
Yeah. There was another question. This was directed to Usama by Seth. Usama, he's asking, when should we buy investment property as an individual? Then should we buy investment property as an individual or register a company and buy houses using that? Pros and cons for both.
I'm scared of Saf. Anyways, okay. So, see, it depends. See, I personally would recommend that if you have means, you can do it. It's better to do it under a company's name, under a business name. That way you end up saving some money. You can claim HST. HST is your, it's the cream on the top. You can enjoy it. And but for personal gains, it's true. Whenever you have anything in your personal name, it goes into tax bracket, whatever you are in. So better to register a company. $500 to register a company with an accountant. Do not do all the stuff with yourself. Have some experts. Some people try to register a company. Okay, I'll save $500. Do not. If you are investing like $200,000 in some investment, have a permanent accountant. Not big companies, have solo accountants. Smaller companies. They look into, and they give you more time. Okay, and then have a specific lawyer. Work with only one lawyer who you trust. Of course, you can change after, and then make a good company. If you want to bring some people together, do it and invest. That's it. Do it in your company's name. If you want to have, if you want to invest in multiple properties, that way you can save a lot of money. For example, you want to buy a TV for your house, buy it in your company's name and put it in company's expense that you have bought an TV for the office. You get it, sir. If you wanna fill up your gas tank, you do it in your company's name because you are running for your company. If you wanna have a meal with your family out, do it in your company's name because you take your clients and had them meal. Okay, you wanna pay all your legal fees, all your taxes, whatever you wanna pay in maintenance, repairs, your all services, do it in your company name because yeah, you can do it. You wanna buy furniture, do it in your company's name,
Yeah.
right?
Okay.
If you have spent like $50,000 an year, consider 16%, how much you will be saving. But on personal side, it's hard to get away from the taxes, tax. But do it, always try to do it in legal means. Do not get greedy and you end up having notices from CRA. Do pay them something. If it's small, do pay them something.
Okay. I think we're running out of time actually, so I think we'll ask a couple of more questions, and then we can sign off. The second last one would be, it's from Zia. There are some rumors penetrating in market that ongoing bubble in real estate would burst very soon. How do you foresee the house prices? I guess this is a question that everybody's asking these days. And
I'm listing this for 18 years. Harun bhai, maybe I don't know how long you have been listening this to this.
Same thing. Maybe 2 years more. Okay, so I can give you the example from 2017. It's the market was going same way that's going on right now. Okay, maybe this time it's a little bit more. In 2016, if any of you were here at that time, okay, 2016 September October, okay, the same trend has started. Okay, that multiple offers, okay, that you listed even at that time if somebody's property is like garbage as well, okay, they list that property today, there are 70 people standing outside with the offers, okay, and people were selling it like 100,000, 200,000 more than what was, okay. So what happened, okay, um, the demand is more, okay, there is no bubble, okay. The only thing that comes into the real estate is a little bit of a correction, okay. So if anybody was following closely, okay, let's say the house price was 700,000 in 2016, okay, and same house was sold till April 22nd, 2017. Let's say that $700,000 house was sold for 900,000, okay. The regular increase in the property is, I can say that 5 to 7% on an average. Okay, in good neighborhoods it could be 10%. Okay, in a little bit bad neighborhoods it could be 3%. Okay, so but the average comes to 5 to 7% annual increase on the property. Okay, so the house that was selling for 700,000 in 2016, in 2017 it should be around, I can say that 750. Okay, but because of those 4 crazy months that were happening, okay, that was sold for 900. Okay, so whoever sold at that time, they were lucky. Okay, whoever bought at that time, they could be unlucky. Okay, because what happened after April 21st, when the government implemented those overseas taxes, okay, the foreigner taxes, okay, after that all of a sudden the market was flat, so the things were selling at a same ratio from the last year. So that house was still getting sold for 750. Okay, still there is an increase from 2016, but not from 900 to 950. Okay, because that was the craziest thing. Okay, that doesn't happen, and the same thing is happening right now. Okay, and in this time I can say that the factor in is the government funding, the SARB, that people are getting money sitting home and all that. Okay, so people who are working part-time as well, they are just sitting home making more money sitting home. Okay, so all those factors are, and also the biggest factor right now is the interest rate. Okay, the lowest interest rate I never saw in 20 years. Okay, first house that I bought, the interest rate for that one was for 5.99. Okay, and then now I'm getting like 1.3, 1.4 as well. Okay, so that's the biggest. Okay, so yes, maybe the house that you buy today, maybe in 6 months time, when there will be a correction in the market, it will go back to its original price that's supposed to be as compared to the 2020. Okay, but definitely yes, in 2 years, 3 years time it will cross the same thing, million again. Okay, but it's not going to happen like that, that you bought a house for a million today and it's going to be worth like half a million tomorrow. No, that's not going to be happening anytime soon. Anything
Yeah.
from Osama?
Yes, that's a good point. Whenever you buy a house, no one is going to sell it for less. They will wait unless the prices are going to go up. Remember this. For example, if I bought a house for a million now, let's say down the line 8 months, it goes 950. I'm not going to sell it. No one is going to sell it. They will sell it once it has passed a million or whatever the price they have in their mind. One more thing. People say recession. I do not understand recession. There is no recession in the world. Recession is when you lose your job. That is the recession for you. For example, I'm a working person. I'm getting certain amount of money salary every month. If I'm able to pay a mortgage for $1 million house, there is no recession. If I'm prices go down and let's say my house become $500,000, for me there is no recession. I'm still getting my paid. I'm getting paid. But consider this: if I buy a house for $500,000 instead of a million and I do not have a job, there is a recession for me. Secure your jobs, guys. Property is never going to go down. Unless you can pay the mortgage, there is no recession.
I agree.
If you have the holding power, okay, if
Yeah,
you have the holding power, that's what the key is. Okay,
yeah.
if you
There is no
think that
recession for you.
yeah, that's right, yes.
Okay, I guess this is a last question. This is from Sumaya, so it's a little longer. It says, "What is the opportunity cost of waiting to accumulate the down payment for a highly priced unit or a house, as compared to using unconventional financing options for down payment?" So, let me remind you that if there are any legal implications to the answer, then the speakers are not going to answer it. But if the speakers think that there is no legal implications to the answer, or you can answer in a way that there are no legal implications, please do answer.
Usama, you want to answer that?
No, yes, just one thing. There are different means to finance your house in start. For example, you want to buy a house and you have 5% of down payment. Let's say you want to have a house of for, I'm just giving you a basic example. You can do it for your house. 500,000 you have you chose a house for $500,000 and you want to put 20%, but you have 10%. So what you can do is you can arrange 10% high interest rate loan. That could be around 10% interest rate, that could be around 12%. But that will be given to you. That is all legal. That could be given to you by some lender, private lender, bank even do that. B lenders do that. C lenders do that. Let's say for 50,000 you get 50,000 from them, but that would be just the interest part, $500 a month. All right, you won't be paying anything towards the principal. So once you get the house now, because you want to gain on the capital value of the house, so you get the house now, you keep it for a couple of years, you refinance the house, you take 50,000 off them and give them back to give that money to them. Now you have 20% in your house of yourself, and you gained on on the appreciation as well. That's one way of doing it.
Okay. Okay, thank you. I think that's all the questions. If any questions are left, we would really encourage everybody to ask those questions in our Nustian Canada group for real estate. In the end, on behalf of all of the larger Nust community, thank you so much, Haroon and Usama, for your time and all the information that you gave. It was a busy Saturday morning, and I'm sure you had so many other things to do. So, as for the large Nust community, I hope you have enough information to take back with you. We all become better investors, and hopefully soon we all become house owners as well. The Nustian Canada Real Estate Group will be shared again in all of our major groups by our community engagement manager, which is IMO. Please do go to that group. Ask any more questions that you have. Both of our speakers for today are okay with sharing their contacts, so their contact will be shared on the groups later on. Please reach out to them for any questions they have. I would like to remind everybody once again, please do not ask questions that have illegal implications for the speakers or for yourself on a forum where it can be recorded. Please respect the speakers and respect the major groups as well. There will be a survey floated by our community manager, IMO, later in the next couple of days. Please do answer those questions. Those questions and those answers really help the Nust community to help and make your lives in Canada better. So please do take some time out to answer those questions. Thank you so much once again, Usama and Haroon, for all of your time and all of your all of your information. Thank you so much on behalf of everybody. And I hope everybody has a very good weekend. And Allah Hafiz.
Thank you. Allah Hafiz.
Thank you very much, everybody.
Thank you.
Usama, nice to see you.
Allah Hafiz.
Okay, Allah Hafiz.
So much, Haroon. Thanks, Usama.
Okay, Allah Hafiz.
Thank you. Thanks, Farzia. Ma'am Karen, are you still there?
So Farzia needs to stop recording, or
That's what I'm waiting for too.
no, we have email.
I can do that. Do you want me to do that?
Thank
Yeah.
you so much, everyone.